Where to register a holding company in 2026. When choosing a jurisdiction for a holding company, the tax rate is not the only important factor. A mistake at the start can lead to issues with bank accounts, double taxation, and weak asset protection. A holding is not just a tool for obtaining dividends. It allows ownership of shares in a business, real estate, investments, and intellectual property, separating assets from operational risks. In 2026, one of the strongest solutions for an international holding is the United Arab Emirates. Here, there is corporate tax residency, a developed banking system, clear regulations, and capital protection tools. A holding company registered in the UAE is considered a tax resident of the country. This confirms to banks and partners that the company is real and not a shell entity. The application for registration for corporate tax must be submitted within 3 months from the date of company registration. And after a year of operation, the holding can obtain a tax residency certificate. It opens access to double taxation avoidance agreements. If a holding owns at least 5% of a subsidiary and has held it continuously for at least a year, the dividends from that share are not subject to corporate tax. The company can freely receive them and distribute them further. This is the official note, the exemption of equity participation. But it is important to understand the UAE is not a classic offshore. Banks and regulators check the origin of funds, ownership structure, and actual presence. Therefore, the holding must be properly arranged, with documents, accounting, and confirmed economic presence. There are alternatives as well. Singapore is suitable for investment structures and the Asian market. Hong Kong is for trade, especially with China. Mauritius is for investments in Africa and India. The British Virgin Islands are for simple asset ownership, but today banks are more cautious towards them. A separate value of the holding is asset protection. It separates the owner's property from the operating companies. In the UAE, tools from the Dubai Financial Center are often used for this. Private funds and family offices for capital management and inheritance. There is no universal answer. However, the UAE today combines tax efficiency, residency, strong banks, international reputation, and capital protection. The main thing is to correctly build the holding structure. Dynasty Business Adviser helps to choose a jurisdiction, register a holding in the UAE, and prepare the company for the requirements of banks and tax authorities.